This is Boxes and Briefs, a podcast with real-life business stories. But we will be asking the hard questions and challenging traditions. So broaden your thinking with fresh perspectives and solve problems for business success. Welcome to another episode of Boxes and Briefs. My name is Lisa.
I'm Lucy.
And today we have with us Oliver Mander. Welcome, Oliver.
Kia ora.
Hello. Oliver is the CEO of the New Zealand Shareholders Association. He is a strategic thinker who loves to solve problems. He has a long-held interest in the New Zealand share market, and he was a former columnist in the New Zealand Herald.
That's right.
Sounds very interesting.
Oh, look, I've always enjoyed pretty much everything that I've ever done throughout my career, so this is just continuing the theme.
Nice. Good. So for our listeners, can you explain to us what the Shareholders Association is, what it does?
Yeah, sure. So essentially the Shareholders Association aims to protect, enable and reward investment for individual shareholders. We work really hard to improve corporate governance across New Zealand. We will advocate for all investors to make sure that their rights are enabled and supported by listed issuers. And we work with companies just to really facilitate conversations where there are particular issues.
Oh, explain to me an example of a shareholder's right.
Yeah, so for example, as a shareholder, you have the right to be heard, you've got the right to be listened to.
Mm-hmm. Even if you only hold like 1%?
Yep, even if you only hold not even 1%. I think there are very, very few individual investors in New Zealand who hold 1% of our major companies.
Okay, $1.
Yep, if you hold a small number of shares,
yes,
you certainly have the right to attend a company meeting, you have the right to talk to directors, to talk to the board at that meeting and to ask particular questions about how the company is performing and what it's actually doing. So the directors are your agents in the company. They govern the company in your interests, well, actually in the company's interest, but
you get to have a say about it.
You get to have a say on the directors that are on the board. So each year there's voting that occurs in terms of who's going to be the directors for the coming term, if you will.
Yep.
And as shareholders, you get to vote on who those directors are.
Okay. So I imagine that somebody with a nominal amount of shares wouldn't have a very loud voice.
It's a really interesting question actually, because if you've got a relatively small amount of shares, but if you can pick up a particular theme or if there's something that you're concerned about in that company, then actually as a small investor you can have a voice. But really that's where NZSA comes in as well. We can help enable that voice by grouping together like-minded thoughts or concepts, and because we're working on behalf of what is best practice in terms of governance and therefore long-term performance. Yeah. So actually we're trying to make sure that all shareholders do have that ability to have a voice. We have representatives at every company meeting that occurs, every shareholder meeting that occurs across the New Zealand market. And if there's any particular questions to ask or analysis to be done, we'll be the ones out there asking those questions.
Well, I imagine that we're turning a corner as far as shareholder voice, because from what I've seen, people will look at whether the number is going up or down or not as to whether they decide to invest. That's pretty much they might hear a hot tip from someone or any of that kind of thing, and that's how you get involved in shares. Oh, this company is doing really well, I'm going to buy some before the share price goes too high. But more and more as the generations become more and more aware of certain aspects of how companies run and what their policies are and how they're working towards a better environment globally or something along those lines, that becomes the deciding factor of who you want to invest in as well.
It actually ultimately does, and it ultimately always should be. I mean, what you've described early on in that statement is called momentum investing. Yep. And it's where people see a price increasing, a share price increasing, go, oh, I want some of that. FOMO, fear of missing out, right?
Yeah.
So
and purely money making.
That's right. So it becomes a speculative, a betting or a trading activity. Now that's not what we stand for. We try to stand for that long-term investment opportunity, the opportunity for all New Zealanders to build their wealth over time. Yeah. We've become very fixated in New Zealand around property. Yes. And that has been a long time thing. It's been supported by consciously and unconsciously by successive governments and financial institutions. But actually the way to build wealth in New Zealand and improve our productivity is for investments outside of property. It's actually trying to broaden that investor landscape to say, actually there's other opportunities here. They exist on our share market.
What did you mean just then by productivity?
New Zealand does have a long-term problem with its productivity. I think that's fairly well documented and has been lamented by many economists and politicians. We don't produce enough for every person that we've got here. Our productivity rates are actually really low compared to others in the Western world. And
so are you talking like, sorry, I'm a little
No, that's all right.
Are you talking about we don't produce enough meat, milk, workers?
Basically.
Everything.
So in terms of the dollars that we generate as a country, that's less than the dollars that other countries generate for the same amount of input, and that's around productivity. So, and a lot of that is to do with our fixation around property, because property, yes, it serves a function, it serves a purpose, and in fact there are many listed property companies on the NZX as well. But ultimately it only takes you so far, and because we've had such a strong bias towards property as the investment as the way to build wealth in New Zealand for individuals. I mean, I'm not bagging property, actually. As part of a balanced portfolio of investments, absolutely fine. Yeah. But actually there's other ways to build wealth as well. No. So what's happened in recent years is you've seen new investor platforms come on, you've seen new information that's being enabled for shareholders, and we've been a part of that as well.
Sharesies and things like that.
Yeah, Sharesies is an example, but also just the fact is companies are getting better at disclosing information to investors. Yeah. So that boom of information and that access, easy ability to access new platforms for trading, actually what that's created is a whole new generation of New Zealanders who have the ability to create wealth over time that they probably didn't have access to before. And that's can only be a good thing in the long term.
So then for those people who are wanting to take that further step other than just making money, they want to be conscious of who and what they're investing in. What should they be looking for?
Look, you can enable that through your investment choices. So it's not that you should stop investing, because actually there are many companies out there who actually do operate according to particular frameworks, and it comes down to whatever's important for you as an investor. Even if you're investing just to make money, as you put it, and don't forget we live in a capitalist society where that shouldn't be a dirty word. Our ability to grow long-term wealth is actually important for everyone. Yes. But that should be considered in the context of the long term. So investing in a share just because the share price is going up, well, I guess I'd consider that a very short-term action. So it's actually about understanding the company from a financial perspective. What are its long-term chances of success? What is its strategy? How does it interact with the world around it? And that broader concept of interacting with the world around it, well, that's where other factors come into play. So, for example, recently New Zealand King Salmon, which is a salmon fish farming company based in Nelson. So they've announced their results recently. They recently had a project consented called Blue Endeavour, and that lets them farm fish in the Cook Strait. Right? Okay. That is a reaction to climate change. That's a reaction to the fact that they know that their previous strategy is being threatened by a warming environment, by warming water. Salmon don't like warm water. So that puts their existing farms at threat. So they've got this other option to say, okay, we know this is a strategic risk. We've taken an action here that we think will make us more environmentally sustainable and actually be better, operate in a way that's better for the environment as well. Well, so here's what we're doing about that. So every company, as an investor, you're looking for how companies handle risk. Yes. And whether those risks are financial, whether they're coming from the environment, whether they're coming from a social license to operate, actually that's really important for investors to understand. And that's the sort of information that, as New Zealand Shareholders Association, we try to look at and provide our members with that information.
Now you have, what are they,
company assessment reports.
Yes, company assessment reports. Yep. So if you're a member, people can look at these reports.
Yep.
And they are reports based on a certain criteria NZSA has created.
Yep.
And is it like a traffic light system?
It is a traffic light system. And what it does is it says, so here's some best practice that we've collated from governance policies around the world. And it says, okay, well, from a governance perspective or from an environmental sustainability perspective, here's how this company is performing in terms of both the disclosures that it makes to investors, because ultimately information is key. Information is what's required for investors to make decisions, but also the structures by which they operate. So, for example, we're very keen to ensure that there's effective independence of thought amongst directors of that company, and that's particularly important if you're a small investor in a company that's controlled by a major shareholder. So we want to make sure that you are still represented effectively at the table.
Yeah, why do you want independent thought?
Come on, Lisa.
No. Why? Why is it a good thing?
So we think that diversity of thought is a good thing because it brings different perspectives to a problem.
Okay.
So that's a really important thing to think about from our perspective about the choices that investors make about the companies that they invest in. So ultimately, I think a lot sheets home to the financial performance of a company in the long term. But it's those other environmental factors like climate change, like environmental sustainability, like a social license to operate, quality of governance, that impacts ultimately the financial performance of a firm.
Okay. So somebody new who's decided that they want to do the research, if they're not using your company assessment reports, would they have to dive into mountains of paperwork to figure things out? Like, what's the alternative?
It's actually a really good question, and the short answer is yes.
Right.
If you're doing appropriate research, and there's plenty of information out there for investors, but it does mean reading annual reports from companies, and we know that a lot of investors these days don't do that.
No,
But
goes
actually
into the
going-
email file of,
that's
I'll
the
read
one,
that later,
yeah.
and you never get to it.
So that is still a really useful source of information for investors, but it also might be reading analysts' reports, it might be trawling the internet for whatever's out there about the company. It's actually understanding the company's strategy and how it impacts and how it is impacted by
So that's a lot of research.
It is a lot of
How
research.
many companies do you research?
So we cover nearly every listed company that has an operating business on the NZX. So in fact, we've got what we term 100% effective 100% coverage
Wow.
for the exchange, and we've got a few companies on another exchange called Unlisted as well, which is a wholesale investment platform.
That's a lot of work.
It is a lot of work. We've got a little team that looks at that, and then
Little. How big are we? How little are we talking?
we're talking. I'm really busy, Lisa. We are talking little. A couple of part-time researchers, and obviously then I look at those assessments as well. The other thing that makes us really unique is because we can have the conversations with companies. I can talk to them about the reports that we're producing.
Okay.
So if I've got something wrong, or if we're missing some context, or if we've actually got it right and the company is going, oh, actually, yep, we need to look at that.
Okay, that's
Those
good.
are the types of conversations that we can have, and that's probably a bit of a unique factor compared to
Yeah.
an individual investor.
Well, that makes companies better, right?
Yeah.
Ultimately, yeah, and that comes back to improving corporate governance. That's a key aim what we're trying to achieve.
Are they quite good at taking on that advice?
It depends on the company, but yes,
Right.
actually. We think, and I think that fundamentally comes down to our values and what we're about.
Okay.
So we want to make sure that we do maintain that independence, and that we do maintain credibility, that what we're saying is evidence-based and objective. You know, we're coming from a place of constructively improving the things that we're looking at.
Yeah.
Yeah.
We're not trying to chuck a rock,
Well, do
at
you
least
get
not
it?
by
Do you
itself.
get it wrong?
Sorry?
Do you get it wrong?
Look, everyone makes mistakes, but actually in the recent past, I would argue that we have raised the right concerns at the right time with companies and particular investors.
Wow.
And we've had, you know, in the last 6 months, I think we've had concerns around elements of Fletcher Building in terms of as they search for their new chair. We have raised some concerns last year around director independence at Sandfords. We're also making submissions fairly constantly to NZX, to government and others, and the FMA around particular issues that may impact investors. So, look, we have had a really busy start to 2024. There's been a lot going on.
Are you worn out yet?
Honestly, yes.
You're halfway there.
But look, I have a lot of energy, and hopefully that can. The energy rebounds and rebuilds. So,
Yeah, you get it back.
That's right.
Yeah.
Yeah.
Okay, so what are some common mistakes that investors make when they're doing their own research?
If we go back to what you were talking about before, people will look at a share price and say, "Oh, that's going up. It must be good."
Yeah.
Well, actually, that's not always the case. And that element of momentum trade, going up or down, that creates opportunities for investors. So if a stock has really negative sentiment and it's been oversold, and that's a bit of a technical term, it means its share price is depressed relative to its potential true value. Well, actually, that creates a buying opportunity for investors. In the long term, buy it while it's cheap. Buy low, sell high. And often what a lot of investors find themselves doing is they become emotionally wedded to a particular share or a particular position. It's really difficult to separate that emotional value that you attach to something from the logical, technical decision around, I must sell this.
Okay.
Or I must buy this. So
And the words are frozen, let it go.
let it go.
Yeah.
I never thought that would come into this conversation, but yeah, that's about right.
You are very welcome.
Boxes and Briefs is proudly brought to you by Gilligan Shepherd, the problem solvers in business.
Okay, Oliver, tell me some success stories based on what the NZSA has done, that just the feel-good stuff.
Okay. So success stories. Sometimes
Yeah.
success takes a long time to play out. Let's be very clear about that.
Okay.
So there's no silver bullet to anything, but we did, for example, we intervened in a couple of situations that might be really relevant. A few years ago, there still is a company, it's called New Talisman Gold Mines.
Mm-hmm.
We felt that the company's board and its CEO lacked a coherent plan to take that company forward. We activated around the company shareholder meeting in late 2021.
Mm-hmm.
The result was that board was voted off the board, and we had we'd supported a new board member coming onto that board as well.
Okay.
Subsequent to that, we also supported other board members joining that board, so it still maintained independence, and
Yeah.
it also complied with requirements of the NZX.
Okay.
What that has led to is a company that, at least now, has a plan.
Okay.
Whether it succeeds or not, it is a gold mining venture that's notoriously difficult.
Okay.
Whether it succeeds or not is less relevant to the fact that it does have a plan, and there is certainty for shareholders one way or the other, and that certainty will come sooner rather than, never.
Yeah.
It's no longer a bottomless pit where money was just being fed into it. It's actually
I guess
now
it's
a coherent plan and some outcomes that
It's a bit of
should
a
result
weird
in value for
concept.
shareholders.
It's a weird concept to think that, like most business owners, you own the business, so you get to do with it what you want. But I guess once you're on the share market and you have a board,
Yeah. I mean, shareholder democracy is still very relevant. So, of course, yes, you can vote, but that board, they're your agents
Yeah.
for your business.
yeah.
So, you don't have a say in the day-to-day management of that business. The best you can do is say, I'm really unhappy with the strategy of this business and how this business is being run. And that's when you can start to activate change. So if I look
Okay.
at another example, this is probably
Yep.
a bit more recent and a lot of more people will have heard of Ryman Healthcare.
Yeah.
Ryman Healthcare has had a series of challenges over the past 3 to 4 years. Certainly, we joined the chorus around actually more transparency around cash flow and better debt management. But we also looked at the board as a whole and said, actually, we're not comfortable that this board is really thinking about its future in the way that shareholders may expect.
Okay.
We felt that the board had developed a culture of a very sort of, there were some sacred cows in there, decisions that the board couldn't make, even though they probably should have made those decisions, and that's, say, related to a particular raising of new capital. Again, board culture, board diversity, how that board was thinking about itself in terms of independence. There's probably some other factors in there as well, and we really were quite vocal about some of those. We were concerned about how they were reporting progress on their builds. And, ultimately that has led to significant change at that company.
Yeah.
You do have a situation now where there is a new board and a new chair and new style of leadership, and that company has certainly, in its latest set of announcements and results, it has certainly upped its game in terms of disclosure and reporting, and probably set a bit of a benchmark in some respect for how the wider sector could operate or could think about its disclosures and cash management. So
That's wonderful.
Great.
we certainly weren't the only ones to instigate that change. I
No.
hasten to make that point. But we certainly represented the interests of retail shareholders
Yeah.
in making sure that we could be credible and objective in helping and giving a feedback to that company that could
Yeah.
help it move forward.
Well, speaking of, you have this thing called a proxy,
We do, yeah.
which means all of these people who own small amounts of shares can all band together under
right.
your voice, and it brings more weight
That's
to
absolutely
the
right.
conversation.
Yep. So we will choose to vote. We design part of those company assessment reports, as well as being a traffic light system. It also tells people how we're voting.
Yes. Now explain the voting. So when there's a board meeting,
Yep. Oh, sorry, a shareholder meeting.
shareholder meeting, there are certain things that they're going to do a vote on.
Correct, and that's often director re-election.
Yes.
If it's a special resolution, that might be around, say, capital raise or debt or whatever it might be,
Yep.
or a major transaction of some sort.
Increasing directors' money.
Increasing director fees.
Yes.
Last year there was one particular company that increased director fees, or proposed to increase director fees. We made our feelings very known on that matter. The resolution was actually withdrawn by the time the meeting turned up, so it was never actually voted on.
So very effective.
Well, again, yes, the market as a whole is effective, but we
Yes.
certainly made our thoughts very plain and very known. And because we're independent,
Yes.
And actually, I don't have to sell anything.
No.
So ultimately, I think that voice feels very different to companies listening to us than someone else.
Yes. So the vote is for making companies better
Yep.
and for making it better for shareholders.
Ultimately,
so we've got this
yes.
whole better culture thing happening within the share market.
Yep. And ultimately, that also then works because we can talk to both sides. We have shareholders
Yes.
on one side, and of course, we actually talk to the companies themselves as well, and we understand what their positions and where they're coming from. So we're in a position to make an objective decision on the resolutions that are being tabled.
So if I'm a member of the New Zealand Shareholders Association, first
Mhm.
of all, I've got access to your company reports.
Yep.
So that will help me with my research. And if I own shares, that means I have a vote when it comes to decisions.
You always have a vote, but it means you have a researched vote and a
Yes.
voice in terms of how your vote is being.
But whether I'm
performed.
a member or not,
Yep.
I can give you...
Yes, absolutely. In fact, we have a lot of proxies from people who are not members.
Okay. So for those people who don't like reading their emails, don't have times to go to the meetings,
Yep.
they can just hand it over to you,
Yes.
knowing
And we
that
have
they can-
we have a team that researches it, comes out with an answer.
Yep.
If you don't like the way we're going to vote, you can vote yourself, and that immediately overrides anything we're going to do.
Okay.
And that's fine.
That's
I'd be
great.
really worried if people agreed with me 100% of the time. But yeah.
Okay, here's an interesting question. What role do you think corporate governance and shareholder activism play in the New Zealand share market?
Improvement.
Improvement. I mean, we have experience. This is a Gilligan Shepherd podcast. Bruce Shepherd has turned up at various shareholder meetings in his different outfits, and
He has in the deep, dark, distant past. That's
yes, oh, I'm sure it's going to come again. I'm sure it will happen again.
Right.
So that's kind of the activism aspect.
It is, but ultimately that's about feedback.
Mhm.
And that's why I answered that question very quickly with the word improvement.
Yep.
Because ultimately we act, and any shareholder activist acts to improve governance in New Zealand companies.
Yeah.
And we think that improved governance leads to long-term performance, but also to long-term investor confidence as well.
Mm-hmm.
And certainly to some extent, I think we've seen that play out in New Zealand. From the dark days of the 1980s and the 1990s, and Bruce, I think, set up the NZSA in the early 2000s.
Yes.
I think governance in New Zealand has moved a long, long way since then. Certainly, you don't hear New Zealand being talked about as the wild west of investment anymore.
No.
And some of the settings, I would argue, for close countries exchanges, I would argue that they're the wild west of the future.
Okay.
And
Well, what do you see the future for New Zealand share market? How's it going to evolve?
So I think it's a really interesting question, Lisa, because I think right now there's also New Zealand's culture seems to be predisposed towards thinking that the grass is always greener somewhere else.
Yeah.
And I can never fathom why. So you look at our share market at the moment, and it's sort of small. And yes, it has suffered from a lack of new listings, but that is not unique to New Zealand. That is the global issue associated with share markets the world over. There's been a flood of money moving from public to private. And you've heard the term private equity, and that has certainly grown in New Zealand and other countries as well in recent years. But arguably, long term, the sway back to public, it has to occur, because ultimately that's about how investors can choose and decide what to do with their money.
Yeah.
And that can only happen in some form of public forum.
Yeah.
I think one thing, if we look at how investor mechanisms have changed in the last sort of 20, 30 years or so, there has been a move away from what's termed DIY investing. So where I as an investor invest directly in a company. And you've now seen sort of graduated elements where individuals can give up some element of control. Now, that's actually probably a good thing, because if you're not particularly interested in investment or doing the research or chasing it, and there's a plethora of reasons why, it does not make you a bad person. But then you have options, right? You can go into what's called a DIM service, for example, discretionary investment managed service, which is where you outsource your investing decisions to someone else. Right? You can choose to invest in funds. Now that way you have a tiny bit more control, because you're deciding, okay, well, I'm still going to invest in this fund and that fund over here.
Kind of like your KiwiSaver, right?
Kind of like your KiwiSaver.
So if you have a KiwiSaver, you are officially a shareholder.
Yes, absolutely.
Yes.
Yeah. And that's something that actually, I think that will grow in consciousness over time. And again, nearly every person in New Zealand is an investor in some way, shape or form. Most of them just don't know it.
Yeah. Well, we do grow up with that very property heavy.
That's right. That property-centric culture.
Yeah.
So and sometimes, you might have an interest in investing directly, but you need the advice and support to do that. And that's where all of the custodial relationships come in, or broker relationships come in.
Yeah.
So look, all that choice, I think it's really good for New Zealand investors.
Yep.
But at the same time as that, the further removed you are from the market, the less engagement you have directly with it.
Yeah, so it's kind of like with property, if you got into property flipping, you
Yep.
learn a whole lot of stuff. You learn how to spot the houses that will make most
That's right.
value. You learn what areas need the most improvements, when to buy and sell on whatever the market's doing in the property. And it's got to be the same for shares.
It is,
Like
and I
if
would
you
argue
wanted-
that if you wanted to get into that and do that,
Yeah.
if you wanted to trade or flip, to
Yep.
use that word in,
Yep.
in property, yes, you could probably do that with shares. But please, if you do that, pay your tax appropriately. So if you're trading profits on
Warning.
shares,
Warning.
make sure
yes.
that you do that.
Okay.
But yeah, I think it's actually a reasonable analogy,
Yeah.
because it is no different to a property market. But for most New Zealanders, they haven't got that consciousness that it's actually there, and that option
Yeah.
is available to them to actually
Yep.
look at and do.
Right.
So you can give your money to a property flipper and hope for a return on investment, which would be your managed funds person.
Yep, but they would call themselves a property investor, not
Yeah.
a flipper at that point, because you're investing for the long term.
Yes.
Okay.
Yeah.
So
Okay, so what's your final piece of advice to any investor looking to succeed in the New Zealand share market?
well, one thing I'm not going to do is give advice, because I'm not a financial advisor, and every individual's situation is very different. But certainly, I wouldn't be afraid of it.
Yeah.
And I don't think that's advice. I just think it's something about
Don't be afraid of it. Learn.
don't be afraid. Take the opportunity to learn. Have a
Yeah.
little bit of skin in the game, and actually just see what that drives and see what you learn from that. And I think it is very analogous to actually just, if you play a little bit, you actually learn by doing.
Yeah.
And don't be afraid of doing the doing.
But I guess a step further than don't be afraid of doing the doing is, get access to the research that you guys do.
Yeah. Yep. No, I would
I think
always.
it would put you a step ahead, wouldn't it?
No, I think the work that we do is very helpful for individual investors.
Yes.
Not just from the practical things of, yes, we run a lot of events around the country at different times, and you can hear from those CEOs and those speakers that we have, but also just from the knowledge that someone's actually looking out for you.
Yeah.
And I think for most investors, it's really important, particularly if it's a big, scary pond that you feel like you're playing in. Well, actually, there's a little bit of surety there
Yeah.
that
Yeah.
someone is looking out for
That's
you.
nice.
Like that. Okay, so if our listeners want to find out more about the New Zealand Shareholders Association, what would they do?
Just jump on to nzshareholders.co.nz. There's a bit of information there about what we do and how we do it. And there's also a Join Us button. And you can join from $15 a month. Or
Is that all?
Or $145 a year. So, yeah, it's
Well,
not,
that's worth it.
not a lot of money.
Yeah.
No.
Yeah. Yeah, when we do aim to make it as cost effective as possible for individuals to join. Yeah.
Awesome. Thank you so much for your time, Oliver. It's been eye-opening.
Thank you, Lisa. Take care.
Thank
All
you.
right.
Thank you, Lucy.
Boxes and Briefs is proudly brought to you by Gilligan Shepherd, the problem solvers in business.